Hi, it's Chris Titley here. As part of the Morgans Conversations, we're joined by Andrew Tang, strategist at Morgans. Andrew, thanks so much.
Thanks, Chris.
Andrew, what's affecting global markets at the moment?
Yeah, there's a number of factors. So obviously geopolitical risks, what's happening around in the US around Trump and whether or not he can get a lot of his policies through. So right now they're looking at implementing some form of tax reform. So markets are somewhat optimistic about it, and you've seen the US market obviously reach new highs on the back of that. On top of that, you're getting improving economic prospects in Europe, and US continues to move along quite strongly. So I think the global macro backdrop, whilst there are some concerns around North Korea and whether or not Trump is going to get a lot of his policies through, I think generally the macro backdrop, particularly for the Aussie market, is looking reasonable at a global level. There are concerns, but the market seems to be shrugging it off at the moment. Volatility at 24-year lows. So at the moment, it's business as usual. It's what we've seen from the markets, where we've got low inflation and a reasonable amount of growth. So we do think this Goldilocks scenario will eventually change. There's no way volatility can stay this low, just given some of the concerns that are sort of manifesting around the world. But having said that, do we forecast a recession or a global another global financial crisis? Probably not immediately. So.
The local market, what's affecting it locally? Is it the Sydney property prices? Is it interest rates?
Yeah, it is. Well, interest rates, we're thinking it'll remain on hold at least for the next 18 months. We think that the new governor of the RBA, Philip Lowe, is probably taking a little bit more of a financial stability stance as opposed to just be wedded to inflation. Inflation still remains under the 2 to 3% price target set by the RBA. But for now, I think interest rates are on hold, so reasonably supportive. And yeah, obviously property prices we're keeping an eye on. There has been some signs that may be softening just a bit, particularly in areas in Sydney where the auction clearance rates hovering about the high 60s, whereas this time last year, we were close to 80%. So I think for now, there is some concerns around, the bubbliness in the property market, but given what prices have done more recently and tapered off, I think that will please the RBA. And with the dollar obviously coming back from its highs recently, I think that will be supportive for the Aussie economy. We did hope that we were going to see a little bit more in terms of capital expenditure and more commitments from CEOs out of the reporting season. Unfortunately, that didn't manifest itself. I think investors are still very concerned about getting income, buybacks, high dividends were rewarded through reporting season. So I think, whilst we're getting high levels of business confidence, that's not yet translating confidence into actual earnings and investment plans. So I think, we are still in this transition out of mining into the non-mining economy, and that's going to still take some time. So I think, this sideways action that we've seen the ASX 200 trade over for the last 4 months may continue just for a little while yet, until we get a clearer picture. Either we get a pickup globally in cyclical growth, and you start to see that manifest in our market, or we might actually break the other way, potentially if there's earnings disappointments, where we've seen through weaker consumer confidence, which manifests through maybe a weaker demand in the near term. But I guess our base case is more or less we'll trade sideways until we get a clearer picture as to what's happening either globally or locally.
And Andrew, part of your role at Morgans is also to oversee and to help with model portfolios. Can you tell me a little bit about that?
Part of the investment committee, we at Morgans we have 5 portfolios, in fact. Part of the investment committee, we come together, form a view as to all the various asset classes. We have fixed interest, REITs, and 3 equity model portfolios, so balanced income and growth portfolios for different type of investors within Morgans. So the investment committee regularly meets and discusses what assets are appropriate for portfolios. We implement a research view, a macro overlay, and really understand forming from all parts of Morgans, both from the institutional desk, from the retail desk, as well as research. We get a clear picture as to what's happening around in the markets and try to form a view that's appropriate for our clients.
Andrew, thanks so much for the update.
Thanks, Chris.